Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. Hope your day is going well. Well, it's a little bit like waiting for Dodo, waiting for Chairman Powell to speak at Jackson Hole. It's a very built up as a very special event indeed. It's as if the whole future of the world depends upon what this man says at Jackson Hole. And this is the same man who a year ago said inflation would be transitory and was nothing to worry about, and interest rates would be staying low for a very long time. So this is not an individual who gets things right. But he does have a mission at the moment. I think that's all we really need to pay attention to. His mission is to single-mindedly bring inflation down through higher interest rates, because that's what used to happen in the 1960s and 70s. Let's forget that this is supply chain disruption inflation and profiteering by corporations, which is why earnings were so high. And I said at the time, they're not earnings to celebrate because they mean they're eating away at the basic foundations of the US economy, and that's certainly proven to be the case. Of course, other factors have been doing that as well, but inflation, partially driven by fattening profit margins from a corner store to a global corporation, but particularly by the major corporations of the United States, has been a major factor in the inflation curve. But no one wants to talk about that because we all want to make money, don't we? So, everyone, as I said, the world's waiting for Chairman Powell to speak. We all know what he's going to say. He's going to say that he wants to keep a close eye on any increase in jobless claims. He wants to be mindful that there are people out there who will undergo mortgage stress. He'll be keeping a close eye on that. As he makes those remarks, equity markets could rally. And when he finally says, but we're going to continue to fight inflation because that's public enemy number one, and we're going to raise interest rates as need be for as long needs to be the case to stop inflation, well, then you have to worry, because he's not going to stop inflation by raising interest rates. He's just going to add to the pain of consumers and small businesses out there. So it will actually be a terrible thing for the United States, his speech. But in real time, on the day, most investors are just thinking, well, we'll get this out of the way, and then it's another buying opportunity, just because if you buy, things always go up eventually. That's the entire rationale of the market at the moment. So much for any detailed PhDs in economics or mass psychology out there. It's just a belief that markets always end up going higher. So if they're low, you must buy. But that's not always the case. It might take 25 years for the market to make new highs once it has a big crash. So that's a long time to be waiting to get back to break even. In this case, it could be a 3 to 6 year correction. In the first couple of weeks of this year, I said it's either going to be a 6 to 18 month correction. We've had 6 months of correction. I think it's looking like a 12 to 18 month now. But there was a risk that it could be a 3 to 6 year correction in equities. That is still a very real possibility. The economic data, not good. We've seen property prices weaken, as I said yesterday, for the first time in the previous month. Overall, though, not a lot of shocking new data to really assess at the moment. Just this preoccupation with Fed Chairman Powell's speech, and as I've said before, I expect some kind of relief rally in the stock market. If we do not get a relief rally, in other words, people are just glad that the event's out of the way and it's time to buy again. If we do not get that, if we just see the market move up slightly, linger, start to move off a little bit, that would be very scary price action indeed, because that would suggest that the whole world who wanted to buy on the relief rally idea has already done so. And a lot of those people are short-term traders. They're already long. There's no one left in the world looking for these bargain levels, but there would be a large number of very large fund managers out there who are probably hoping for some liquidity to the buying to the upside so they could sell into that. If they don't get that opportunity, they may just begin to sell, if not on the day later in New York today, in the overnight clock, but on Monday, Tuesday, Wednesday. So look for perhaps a 1 to 3 days sideways to up for US equities, but then lower mid to late next week. Clifford Bennett, Chief Economist, ACY Securities.